Hello and welcome to Risk Inbox Plus. I'm Dennis Agel and
I'm Ken Agel.
Thanks for joining us. Today we're going to cover some of the topics that our Risk Inbox editors have been following over the last few days. So let's take a look at the first item they identified as a hot topic from recent weeks. The Federal Reserve System recently released its first Consumer Compliance Outlook for 2020. Tell us a little bit about this publication, Ken.
Yeah, it's a powerful publication because it gives insights from a regulatory perspective, so you can rely upon its guidance. And that is very meaningful for all of us in the other side of the equation. We want to make sure that we're meeting the needs of the regulatory agencies as well as our consumers and members. And that's what this document helps us to achieve.
So they go through and survey examiners to find out what are the most common violations they're seeing out in the field. So that's why this is a particularly hot document to review and see what's going on. Let's take a look at the first one that they mentioned, Reg B's spousal signature requirements. So Ken, tell us a little bit about what the spousal signature requirements of EcoCredit are.
Yeah, it's a very complicated area. It sounds straightforward, but in reality, when you take a look at the variables that are involved, clearly it becomes a significant challenge for any organization. And the reason why begins with this particular statement. In enacting ECOA, Congress sought to ensure that various financial institutions and other firms engaged in the extensions of credit exercise their responsibility to make credit available with fairness, impartiality, and then of course comes the italicized part, which is the most important part, and without discrimination on the basis of sex or marital status. Okay, that sounds straightforward, Dennis, but once you start to get into the nuances, I think the Federal Reserve is smart to present more guidance on this because it always is a challenge for financial institutions.
So let's take a look at some of the things that were highlighted in this article. Kind of gives you a little bit of a foreshadow in what they're going to be seeing as the common violations. That first bullet point, Ken, what's that one about?
Yeah, so obviously when a spousal signature is required, often depends on the circumstances. One of the individuals involved may not have sufficient income, or they may be relying on the collateral that is jointly owned or is owned by the spouse, but is available to the other individual. The challenge, therefore, becomes when do you require it? The other part of it is that getting access to it is often dependent upon state law. Now, if you're a federal examiner, like I used to be, you see state law and you start to shake a little bit because it's a little bit unknown. But also from the banking or from other financial institutions side, they recognize that that means they have to understand the states in which they're operating. That becomes complicated.
The second item they're talking about here kind of alludes to the fact that maybe the primary applicant doesn't quite qualify for a credit on their own. So sometimes a bank might think, well, I need to bring the spouse in, but this is where we start to get a little bit of a danger zone, right?
Yeah, because historically, of course, if you go back 30 years, things were a little different then. And of course, we have evolved and we've become more sophisticated, and the regulation has evolved as best as it could with those requirements. So one of the things that has been carved out is, yes, you can rely upon another individual, but you can't require that it be the spouse. And that's where it gets complicated. But where it gets more complicated, of course, is in commercial lending. And all commercial lenders know that when do you rely on the spouse's signature as it relates to property that might be jointly securing the loan or might be the sole collateral on a business loan? It gets complicated, and you have to walk through the various steps. And one of the best things that this particular article gives us is this kind of a catch-all, help-all. And if you look at figure 1 in the recent compliance outlook, you'll notice that it says in the credit application itself, guidance that helps any institution to ensure compliance. There are 3 boxes associated there. And one of the things that you want to make sure is the individual applying for credit, or is the individual only lending their backing for the credit? Those are 2 different nuances, and so this box helps to understand the situation directly. And by having both individuals when they are a co-applicant as opposed to a co-signer or is significant. That's where institutions need to make sure that they are dotting the I's, crossing the T's. This particular figure helps. And there's a lot more information in this particular article, so I'd recommend a review of it, as well as application to your institution's practices.
All right, let's move on to where are the common violations that examiners are seeing in this area?
Yeah, so now we're talking about what we've mentioned so far. Abundance of caution is not one of the regulation's allowable exceptions. And historically, institutions that said, I'm going to obtain the abundance of caution as a requirement for getting another individual to sign does not fit with the requirements under the regulation. They have to meet those tenets. The other one, of course, the first one, thinking that the requirements don't apply to commercial and agricultural loan. This particular law, ECOA, is extremely broad and applies to any aspect of credit regardless of purpose. The third one, of course, is what we've talked about as well, and that is thinking that a spouse's signature on a financial statement is sufficient evidence of joint intent. It's not just that they're signing the document, the financial statement, to attest that they want to lend their support, but rather that they mean to apply for credit. So utilize that federal box, even as it relates to commercial credit, can be a powerful safeguard to ensuring compliance.
Excellent. Let's move on to hot topic number 2. Once a year, FinCEN comes out with its annual BSA Awards, and if there were Oscars for SARS, this is pretty much it. As you know, there's a lot of confidential information that goes into a suspicious activity report under the Bank Secrecy Act. And so a lot of times it becomes an exercise for financial institutions to just fill out the information, send it off, and never know what happens to it. So FinCEN has its annual awards to help all players in the BSA space see the context for their work. Ken, is this replacing that document we used to get called SARS by the numbers?
You know, SARS by the numbers, or SAR by the numbers, was a powerful insight document that was extremely valuable. This doesn't replace it. There is a SAR database that all institutions would benefit from searching because you can isolate down to the type of SARs, the organization or industry that are filing those. But this particular guide has its own value as it relates to insights that might be a benefit for an organization to take a look at what's being reported, how is it being helpful. It's also kind of a rah-rah document, so it makes sense to take a look to see if your organization has its own ducks in a row as it relates to these type of areas.
So let's take a look at the first item. They mentioned 7 different instances of how SARs were used to help bring down some bad guys. And in this particular case, the first one they mentioned had to do with this law firm that was engaged in various nefarious activities.
Yeah, they are high risk. So of course, as we know, law firms themselves, although the majority, of course, are on the up and up, it doesn't mean that they have a pass. You have to take a look at the activities and make sure they are compliant with what the expectations would be for a law firm. And here, in particular, they helped through the use of SARs to identify those illegal activities.
So in this particular case, there were approximately 100 SARs that were woven together by law enforcement to find this network of individuals, as well as, I mean, we're talking about the bad actors, but as well as also finding who are the other victims that were impacted by this ring of bad actors.
Yeah, bad actors, but also by utilizing the connectivity that's available through the more powerful databases that are being utilized now. This is where we start to see the benefit of that database and the integration of all law enforcement and other agencies being able to manipulate and utilize that to identify those bad actors.
All right, that's a nice lead into our compliance spotlight for this week. Today we're going to cover some concepts that are involved in conducting a validation of a financial institution's suspicious activity monitoring system. So Ken, what is a surveillance monitoring system?
Yeah, so the FFIEC BSA AML Investigation Examination Manual came out quite a number of years ago, but one of the key tenets of the last major update was this discussion of surveillance monitoring systems. Now, a lot of this came out of 9/11, and institutions started to recognize that there was more complexity as it related to the transactional activity happening within their organization. That complexity led to the adoption of surveillance monitoring systems. Now, a surveillance monitoring system can capture a wide range of account activity, such as deposits, withdrawals, fund transfers, automated clearinghouse, ACH, ATMs, and the like, directly from the institution's core data processing systems. So that allows the flow of information into this automated surveillance system, and then from that point, it helps to identify transactions, patterns of unusual activity, or deviations from expected activity. That is the concept associated with a model. And as we all know, it wasn't too long before the regulatory agencies came out with guidance related to models, and that was applied to AML systems.
So an institution goes out and gets a monitoring system, gets it installed, and they're done, right?
That's it, they're done. No, actually, there's more to it than that. An institution that is either encouraged or recognizes the need for those systems goes through that arduous process of implementation. We're sort of mixing fire and ice here. We're talking about core systems that themselves were designed, and then you often have these monitoring systems which have to match up, so they have to work together in harmony. That connection between the two is challenging. What they found in the past is that those systems don't always fit perfectly. And that's what encourages the next part, which is that management should periodically review the filtering criteria and thresholds established to ensure that they are still effective, also accurate. In addition, the monitoring system's program methodology and effectiveness should be independently validated to ensure that the models are detecting potentially suspicious activity.
Maybe you could walk us through what a validation of a model looks like.
Yeah, so now we're talking about historical efforts versus current efforts. When you take a look at the historical effort, you're really talking about back to front, as well as internal system balancing and transaction monitoring. Those 1, 2, and 4 on the bullet list that we show there. Those were the primary drive tests that were utilized historically, but it really wasn't a true validation, because every time you take a look at what was happening and whether it was accurate, that was only one half of the equation. Let's first talk about the other two approaches, the internal system balancing. This particular type of exercise obviously is done from the inside, and so from the outside looking at it, it's more of a valuable cross-check. What you're looking for is, did somebody, as part of the setup or the ongoing efforts related to that system, are they checking to see if it's accurate? It gives you a lot of telltale information, so when you're looking at the entire system, you're always going to request, are you conducting an internal system balancing on a daily or periodic or initial basis? Obviously, the last one, daily, is the best from the independent side, but any of those have a lot of value. So keep your documentation as it relates to setup, and if you're continuing to do this on a periodic or ongoing basis, retain that documentation for the independent validation.
Let's move on to the next item on the list.
Yeah, transaction mapping. This is fairly similar to the first, internal balancing. It's sort of that initial setup. So now we're talking about the two elements coming together and hopefully connecting. That is not an easy process. So oftentimes organizations find that they are slightly off and they're not matching up. That takes a lot of manipulation, maneuvering the numbers, the data fields to finally get it right. And that's really where the setup becomes that challenging effort. So the transaction mapping is often the residual product of that effort. And it makes sense for organizations to provide that as part of the independent validation. Not only does it help in the area of ensuring how an organization set it up, but of course, it helps on an ongoing basis. You can see some of the strengths and some of the weaknesses there, Dennis. The strengths of this particular approach is it helps to catch potential bugs and of course the limitations of it. It's very time intensive, but normally speaking, it was done as part of the setup. The question is, are you doing it from time to time within your own organization? It doesn't validate an AML system per se. It's more of a strong setup.
Excellent. Moving on to the next aspect, we're talking about back to front. What do you mean by back and front?
Yeah, so the back is the output from the system. The front are the source systems, the core systems. Whatever systems that are utilized to feed the back, those become the front and the back. So back to front is an approach that allows organizations to take a look at the output from the AML system and then review whether or not it is accurate. This should be an ongoing process for every organization internally. As alerts are generated, the first question as part of the case management system should be, is the alert accurate? That is a telltale sign that every organization can be utilizing, but it's the same process that gets utilized as part of the historical validation. And you can see that the strengths of the approach is that it does allow for a partial AML system as it relates to core systems. But let's take a look at the next slide because it shows the inherent weakness. Now here you can see in the large blue circle the particular nuances. The yellow would be the output from the AML system. The blue would be the entire feed system. Of course, you would expect everything that's in the yellow to be in the blue. But what about the other way around? Is everything in the blue filtering through into the yellow? And that's where a back-to-front system validation breaks down. So to have a true validation, this particular approach will not accomplish that goal. It has its value, and I would never not want to utilize it because it helps to really understand the transactions, but it's not the full enchilada.
Can't detect what you can't see.
Can't detect what you can't see. And that leads us to our final, well, really our secondary system, which is a front to back. Now here we're getting into the strength of a true independent validation. Now we're paralleling the AML system and we're taking a look at how the system operates outside of the system. We're replicating the rules and we're going through the processes in an independent system and then matching them against what the system is outputting. And I think if we take a look at the next slide, you can see its true value. Now the AML system as well as the core source systems are being perfectly matched. Ideally, we're taking a look at all the activity output, and then of course we're looking at, did it hit within the system according to the system parameters? Now this is not efficiency. We could talk about that later on a compliance spotlight, but this is validation. And we all know that efficiency is an important part of validation, but first you have to get to the stage of accuracy, and that's what this is designed to do.
So once we've validated that the data from the front matches the data that's heading to the back, then what do we want to do?
All right, so combining the back to front and the front to back gives us the cross test. And a cross test is the most powerful type of validation because in this particular area, we know that we're not only proving what's coming out of the system, but we're proving what's going into the system. Ideally, from this point, we also want to take a look at whether or not the system is efficient and accurate, but this gets us into the establishment of accuracy. The next part, of course, is to take a look at how the process worked and then to go from there. Normally speaking, we try to divide our particular validation efforts into 3 phases. The first phase being more of the model governance, the second phase being the accuracy, the third phase being efficiency and coverage. You can sort of get into coverage as it relates to this cross test, but that's the idea behind this particular area.
Is the idea that the AML system will generate a set of alerts, and then this independent validation ideally would also generate a set of alerts, and then an exercise in this cross-testing to see where the matches or discrepancies are.
Yeah. So oftentimes, if you imagine I had 7 fingers on this hand.
That'd be weird.
I know. Okay. And I had 7 fingers on this hand. There are generally 7 typologies associated with AML. More sophistication, obviously, and some institutions use combinations in order to come up with scoring. But the idea is that these 7 types of alerts are what we're looking for in an AML system. The independent system tries to match the 2 against it. And if all 7 match up perfectly, then we know we have an efficient system. Effective is a different issue altogether, but at least it's efficient. But what often happens is the 7 fingers don't match up. Sometimes the independent system finds things that the AML system didn't find. And sometimes the AML system finds things that the independent system didn't find. That has to be investigated. And so in the cross-check, you're taking a look at more nuances matching those elements up. If you find elements that are not identified in the institution's AML system, obviously you probably have more work on your hands because you may have gaps in your monitoring. That becomes an important element for every organization to review.
So there's a requirement for independence within whoever's conducting the validation. That could be within the organization, or an organization might reach outside of its own walls. But what should it be looking for? What should an institution be looking for as far as the scope of an engagement?
Yeah, so as we get engaged in projects, we have a setup document that we tend to utilize. It helps us to understand the process, and it also helps to expedite the review to make it a more balanced approach for any organization. But there are a few things that need to be considered beforehand. One of the key elements is understanding the scope of the project. Clearly, depending on the risk factors of an organization, we have adjusted our approach to meet the needs of that organization. Some institutions want an extreme deep dive. Others can utilize a more easier approach, a more perhaps just a back to front. Maybe they're just looking for a little bit of guidance as it relates to the system. But whatever you're doing, you want to make sure that you understand the scope of the project and balance it against your risk assessment. The second challenge, of course, is data capabilities and accessibility. Both are critical. An organization needs to know, can it get the full source systems? Can it get the output from the AML system? And does it have the ability to provide that? Oftentimes, you want to have it in an anonymized manner to facilitate confidentiality. That becomes an important aspect. Of course, case management system and capacity is often the critical element to efficiency, but it often makes sense for an organization who wants to get into that efficiency analysis to know, do we have a good, strong case management? Does it provide nuanced understanding of what happened to the generated alerts and the like? Strength of investigation is an internal factor. Nobody from the outside, unless they're conducting a full independent audit of the entire process, can evaluate the strength of investigation. But an organization should have its own understanding based on independent reviews or internal reviews. Can we rely on the case management disposition, or are there cracks in that process due to factors known or potentially not currently known by that organization? And then, of course, the fifth one, the role of CIP or MIP, MDD, CDD, whatever you want to call it, but essentially we're looking at, do we have information as it relates to the customers or members of the organization, and is that information integrated into the rules as well as part of the investigation? That becomes another argument as it relates to ensuring strength of efficiency, mostly in phase 3, but all of them have importance as it relates to the AML validation process.
So in terms of understanding the scope of the project, here's a list of things that you would suggest an institution would consider to help scope it.
Yeah, this gets back to what you're looking for from an AML validation, because ultimately it needs to reflect your risk factors, but also what you want to have. So this particular elements get into those aspects. It's part of our normal questionnaire. It makes sense for an organization to establish that, because there's no point in doing a validation if there's a lot of regulatory pressure and the validation that you're pursuing is not going to meet the requirements of your regulatory agency. So balancing that factor makes a lot of sense.
Good overview, thanks Ken. So it seems like the optimization piece is an important aspect. Perhaps we could talk about that a little more next time.
Yeah, next Compliance Spotlight, we're hoping to get into the optimization element. Really, we're talking not just about system accuracy and effectiveness, but we're really talking about, is the system really working for that organization? And that particular need is a very challenging aspect for most organizations, but it's something that we're seeing a lot more movement towards. As we take a look at these AML systems, we want to make sure that they are working for the organization, not the other way around. So that's something we want to cover in one of our next Compliance Spotlights.
Thanks for watching. For Ken Agel, I'm Dennis Agel. See you next time on RiskWatch Plus.